Well, here's Denali Guide back from sunny Ontario. Let's talk about the Fast and Furious markets for the weekend of August 14th. Wow, August 14th, that's a pretty portentous date when you consider, I believe that's when World War I started 100 years ago. And we're having wars. No, I don't mean in Ukraine, I don't mean in Syria, and I don't mean in Yemen. What I do mean is that we're in an era of competitive valuations. China just nuked the world by revaluing yuan. They revalued it again, devalued it again, then revalued it again. Then they announced they had another 157 tons of gold. And you have to ask yourself, why don't they just tell us how much gold they have? It's kind of like Kramer on that Seinfeld episode where he plays the movie guide. Why don't you just tell me what movie you want to see? I think they're playing the game that each month they're going to release a certain figure that's acceptable, that keeps moving them closer and closer and closer to the IMF threshold for making yuan an internationally convertible reserve currency. People seem to be worried about it, but it's happening anyway. The IMF thing would give them a leg up. I was reading a post on Zero Hedge, and it was from Automatic Earth, and the cogent line I saw where was that for the last 7 years, the author estimates there have been no free functioning financial markets in the West. I have to agree with it. I have to agree and not even debate, because the markets are full of intervention. We see these markets going up, down, and sideways on no volume. And we're told it's the algorithms and it's the high frequency traders. But really, the bottom line is the Emergency Stabilization Fund, the ESF, uses J.P. Morgan as its proxy. J.P. Morgan afflicts the markets by pushing the S&P futures one way or the other, and then letting the market come to it. They used to use Kansas City, now they probably use Chicago. Then we have the figures that we're told represent gold prices, and they come from not the COMEX, but the guys I like to call the CRIMEX. And I've got two comparative charts here. I'll pick my phone up and try and show you. And then you can tell me whether you think they're alike. It's kind of in the same venue as which one of these things doesn't belong.
Just mention that people will be looking at this on a replay.
You'll be able to see this on a replay.
Hope everyone's doing great. This is Doll in the background just helping Nick along.
It's my producer.
Yeah.
Okay.
Put a little bit of background music on just to kind of liven this up a little bit. I mean,
because Nick's so dead.
No, this stuff can be pretty dull for some people, but I know it's really, really important information that Nick is sharing with everyone.
Okay.
So I'll shut up, go back into the background, and
Good.
Let you just continue.
Let me jump into the technicals. What are we seeing here? We see the Canadian Royal Mint's Gold Inventory Trust. Slick as they were, they got the public to carry the cost of carrying their gold inventory by issuing exchange tradable receipts, ETRs. Now, what an exchangeable receipt does is says that if you have XYZ receipts, I think the threshold is 10,000, you can bring them to the Canadian Royal Mint and with 30 days notice, receive the gold represented. Okay, so we see then deliverable gold. The CRIMEX really doesn't have gold that's deliverable on demand. In fact, should they get caught, they could declare a force majeure, pay everybody off in cash. So between 1 and 4% of CRIMEX gold is delivered. Shanghai and the Asian exchanges are running about 50 to 90%. So I'll leave it to you to figure out whether you think one's more valid than the other. Let's go look at the CRIMEX, which is a paper gold exchange. Well, doesn't that look different? Wow, that's really strange, isn't it? One thing you have to know, and we'll go back to this, is the Canadian dollar has been very weak against the American dollar. So about a week before you see this big gap right here, you'll find that the dollar skidded to 79 cents and then probably then went down to 75 cents. However, it still belies the fact that this one that I just turned on is not deliverable. So I'd say buyer beware. Actually, I'd say go to your local coin shop, because most of the guys work on a small margin, they work on incredible volumes, and they'll make you the best deal. Because when I get on Investor Village, PM Precious Metals Board, we find people talking about what the best price is. They're talking about mail order, and a number of them have done that to see their deposits fade into the sunset as the people took orders for more than they could handle. So my question to them is, are you playing for pennies or are you playing for delivery? I'll leave it at that. Let's go back to me. I just shaved for this program, so let's spend some time on it.
Looking sharp, looking sharp. Where's everybody at? We're in southwestern Ontario and we're looking at a major storm alert here. There may be storms in the markets, but there's also storms in the sky.
Oh, doll, I'm having trouble making my camera flip.
Are you?
Yeah, I got it. Thank you.
Okay.
It seems I want to take its time. Now, my 2-minute timer has elapsed, so I will start it up again. I'm Denali Guide. This is Fast and Furious Markets for the week ended August 14th. Let's talk about some scary stuff. How about 31-cent copper? Spooky, huh? How about $14 oil? How about the Dow under 1,000? It's all possible. I spent a little time analyzing the Wolfe wave, W-O-L-F-E. Kind of like the four-legged critter with an E. And basically, he does a standard technical analysis of up equals down, and you use 3 or 4 points. It doesn't say when it's going to happen, but it says what could happen. Now, everybody's freaked out that oil closed at 42. Nobody's real happy with the copper price. And as you can see, with the Dow refusing to go over 18, you wonder what's going on, because we've got these great earnings. Of course, they're caused by buybacks. So you figure it out from there. I say I'll be on my guard. In this issue of Peak Picks, right here, which you can get, let's see, you can get here, I said that the market is so wacky that I refused to ask people to consider purchasing anything but specific precious metal stocks and ETFs that short the general market. Now remember, I don't want to make a lot of money, so I'm not in this double and triple leverage ETFs because they have serious time decay. If the ETF has moved to a low, then moves to a high, in the case of the double and triple leverage ones, they begin to lose speed at a fantastic rate. They decay like butter in the hot sun. So I really don't like them.
Maybe close down?
Okay, I'm going to go off here. Remember, you can get a free copy, and I'll talk to you soon. This will be loaded up on YouTube if we can actually figure out how to do it. Bye.